Hey everybody, and welcome back to my channel. In this video, I'm going to share with you a practical step-by-step guide for traders to follow, specifically for trading the New York session using market structure. This is a follow-on from my previous video that I shared, which was a simple walkthrough using market structure together, analyzing price action. But in this video, we're going to be taking it one step further. We're going to draw in some additional concepts, including top-down analysis, and it's going to focus primarily on trading intraday during the New York session, which for me runs 1:30 in the afternoon GMT as I am here in the UK. I'm going to be keeping this pretty simple as a practical walkthrough checklist that you can use every day for trading the New York session. All of the software that I'll be using will be linked in the description below. As always, please remember to like and subscribe to the channel, and let's get straight to it. Okay guys, here I am on TradingView Charts, the platform that I like to use for my technical analysis. And before we get into the video, it's really important to let you know that what I'll be focusing on today is purely analyzing price action using market structure and utilizing some advanced techniques. Now, there are many other aspects of trading, such as fundamental analysis, looking at any upcoming news events, and obviously things such as risk management, but we're not going into any of that today. So don't think that this is the only thing I use to trade. It isn't, but it is a major part of my technical analysis. And it really does give you an edge on making your trading decisions. So step one in the checklist of analyzing price action is to look on the daily time frame and notice the key levels, specifically the open and the close. And to make this video a little bit more interesting, I'm going to use this backtesting tool here, and I'm going to just remove some candlesticks. I'm not really looking at what I'm doing, just to go back in time here so that I don't really know what's going to happen next. So this isn't using live market data. I've taken this back to December the 18th of last year. Which gives us a really nice fresh perspective to go from for this practice. So if I was to load up the charts, I am loading this up just before the New York session is about to kick off, which for me is 1:20 in the afternoon. My step number one in analyzing price action is to go to the daily time frame and to look at what the previous candlestick did. Now this is a really nice little setup because all we're looking at here is market structure, and that means whether the price is going up or down. So let's just go back to where we had a little change in behavior here, because if we scroll back, we can see very, very clearly, looking at the peaks only, the price was going good, an uptrend. It was making higher highs, higher lows. It made a peak here, a high, before it came down. It didn't break this low, it didn't break this high. It consolidated until it did indeed break this low. So it consolidated sideways, diagonally going down here, and then we get this change in behavior because the price pushes up, but it just can't break past this level. It doesn't make a new high, it comes down again, it makes a little higher here, part of this pullback, before it drops down. So we're seeing a shift in behavior from this uptrend to this newly formed downtrend. Now at the bottom here, we have a little tiny pullback, a low, and a deeper pullback here. And what I am looking at is, first of all, that larger perspective using the daily time frame. So on this larger perspective, I am looking for shorts as part of this downtrend. Now, if we look at the most recent daily data, what I'm very interested in is the previous daily candlestick, and in particular, the high and the low of the previous daily candlestick. And that is because a large part of my strategy looks for breakouts past these levels. And in this case, I would be looking more interested at the lows because we're in this downtrend. And again, let's just look at price action here on the daily. So as we did before, we were coming down and it made a little lower high as part of this pullback. We had a new low. So the low, using the bodies only, is at this level down here. So at the moment we are consolidating. Now, as part of this consolidation, price pushed up and it made a high, breaking this high. I wouldn't say that that has immediately shifted into an uptrend. It hasn't. It's just a deeper pullback because we're still within this overall downtrend here. If price was starting to push up and break these levels here, that's when I think it'd be interesting for it to be turning to make a longer term uptrend. But at the moment, this is just what I would call a deeper pullback. So we've got a high here, we've got a low here, and this would be a very choppy place to trade because we are in a consolidation, we're in a pullback. So once again, price pushes up, we get this little pullback here, a little high here. We're starting to lose momentum, you can tell, because the range of each candlestick is lower, there's not much volume, not much momentum. And then we're getting this big drop down here, a big drop down here, and this low here has broken this low here, see? From this low, we've had a pullback to this level here, and yesterday's closing candlestick was a big bearish drop down. Sorry guys, my light bulb has just gone. I'm going to continue with this, hope you can see me okay. I didn't know my bulb was about to go. But anyway, we have this big bearish candlestick. It broke the low here, which for me would look like we're starting to turn out of this pullback, and it looked like it may be pushing down to test the overall low here. Now, until we break below this low and a close below, we're still within the pullback. So it's important to just note that this could be a more choppier place for a trade, but from this little analysis on the daily time frame, I would gauge this as looking for breaks off the low for an entry short. Now, from the daily time frame, once you've got an overall bias like that and you've noted your previous daily candlestick high and low, that's when I switch to a faster time frame. And to begin with, I will go to the 4 hourly as part of my top-down analysis approach to trading. And if I zoom out here, there are a lot more candlesticks because we're now using a 4 hourly time frame, so each candlestick represents 4 hours of time instead of 1 day. But you can see a very similar pattern as for what we saw on the daily because we have more candlesticks. So it may be easier for you to see these highs here that we marked before, the low, and then the pullback that we saw before. What I would usually do is I would adjust this line here. So that was the daily low. I just drop that down to the bodies here on the 4 hourly. And then this is interesting here, that large candlestick we marked from the daily yesterday, as we can see here, that is a very large bearish momentum candlestick down there. Now that's 6 o'clock in the evening on the Wednesday, so I'm going to move this forwards in time now so that we can see what would be the candlesticks I'd be using to trade for the New York session. So this would be what I would see in the 4 hourly, apart from, of course, the current candlestick. So this candlestick here is the 6 o'clock till the 10 o'clock in the morning candlesticks. This was made during the London session. And for this, we've got a really strong push up, bullish. And that can mean one of two things. It can mean that that is trying to fill this big gap down that we received from this big bearish candlestick here, which I will just fill with this box for now. Or it could mean, of course, that the bulls are coming in, that it isn't ready to drop just yet, and that we might continue getting a push up. So for me, straight away into the New York session when it opens at 1:30, because the most recent candlestick was green and quite strong at that, I would wait until 2 o'clock until we had the extra 4 hourly candlestick closed to see what price had done. So I will just open that now. Okay, so now I've moved this forward, so theoretically this would be 2 o'clock in the afternoon. It would be half an hour into that New York session, and we've got these interesting mirror bars forming. We've got a bearish candlestick straight down, but we do have a little wick at the bottom there. At this point, I would then drop to the 15-minute time frame. And the 15-minute time frame is a time frame that I like to take for my trade entries. Now this is what I would probably call a more choppier trade. I'm not even sure I would get into this because we've had such a large momentum down the day before. It's going to be interesting to see what happens here. But sticking with our checklist for using market structure, we've done the daily time frame, we've done the 4 hourly. Now it's time to analyze market structure on the 15-minute time frame. And for this, I focus mainly on the current intraday. So let's zoom in on this current day, and I'm going to very simply just mark out some key levels. So first of all, I'm going to hover over where price opened, and let's just mark out the open here. And from the open, we had a drop down, we made a low, but from then we made a new high here during the Asian session, and price has pretty much been going up during London. So we had a pullback down from that high here. In fact, let's just make these bigger just so it's a lot more clear for you to see. So you can see here we got the high, we got the pullback down, we got the low, The higher low was only confirmed once price broke above and closed above this previous high. So it made a new high here. We got a small pullback here, made a new higher low, and it rallied up all the way up here and made a new high. So if we extend out the level of the previous high low, so this is the most recent higher low, and if we get a close below this level, that's when I would be quite interested to looking for shorts, because that's what I call a change in behavior. And we did get this. We got this just after the London session. In between London and New York, price consolidated down here diagonally, and we got this big drop down, and it closed below this level. So I'm going to just mark the low there as well. We got a push up here. Price didn't continue up to these levels, but instead it came back down and it closed below this level. We're starting to swing lower. So at this point, I'm going to remove these lines just to make it a little bit more simple. And at this point, this provides a really nice snippet of structure. We've managed to go from the daily to the 4-hourly to the 15-minute, and we've even managed to confine that to some price action and market structure that's relevant to the New York timeframe, which means that we are ready to potentially take a trade. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. So this is where we steer just slightly off from market structure. I bring in the wandering tool that I love to use to find a place to take a trade, and that is the Fibonacci retracement tool. I've shared this tool on many videos. I'll include a link to them below, but if you want a video specifically on this tool, let me know in the comments below and I'll see what I can do. What I would do here is, now we have highlighted market structure, which is the foundation of my analysis. I then go to the Fibonacci retracement tool, I drop it from the bodies of the previous high, and I drop it to the body close of the recent low, which gives me these 3 lines here, the optimum trade entry, and that is where I would be looking to get in for a short, with a stop somewhere above this high here, let's say 20 pips. And I would just be targeting more than 1 R for that. So firstly, let's see if we would get triggered into this trade. So price continues down. And as we are in the New York session, I'm looking to just trade that time, which now gives me until about 4 o'clock. That's 2 hours of trading time. Purely because I am looking to trade that small amount of time. That's when I would consider dropping to an even faster time frame, which would be the 5-minute time frame, because we've used this top-down analysis approach and we have really concentrated what we are looking for. So if I dropped to the 5-minute time frame, and I'm going to just remove the fib tool for now, just so we can look at market structure. Now the lines are a little bit off because obviously we've gone down at a time frame. There's a lot more candlesticks to take into consideration. So first, let's just tidy those up. So I'm going to just move that line down here to represent that low that we marked on the 15-minute time frame, and the same with this level up here. So we've got our low, our high, our drop down. We've got the body close here, which was below this low here. And from that Fibonacci tool, let's put that back now. We've tidied that up. So we'll go back to the high here of the body close, back to the low here. We've got our 3 levels. It actually lifts them up a little bit. So I'm going to just lift my entry. And I'm waiting for price to either pull back up here or here, break this low here. So this is where market structure is really important, and you have to adjust and move with price action with the actual markets as they are moving. So once again, I'm going to just remove those for the moment and show you what I mean. We've got another low form down here, which means that this is no longer the most recent low, and this is no longer the most recent lower high, the pullback. We have a new low down here, which is confirmed because price made a low at this point here. We got a pullback up here, and then price dropped down and made a new low here. So we are swinging. And what you can look at as well and take into consideration is the actual New York session itself. So what do I mean by that? Well, that is this vertical area that's shaded here. So at 1:30, price opened up here and it came down here. It pulled up, made a high here, came down here, pulled up, made a high here, came down here. So during the New York session, we are swinging lower, which means that I can go back to my fib tool, but I'm going to use this structural point here. It is the most recent lower high, and I'm going to drop it at the low here, which means I've got a new optimum trade entry area for my trade execution. So let's set a short at this point here instead. 1.2592. My stop it's got to be above this high, including the wicks, because the wicks are included within this candlestick, which means I'm going to use a 15 pip stop. And I know that I've got the range down to this level because that is the level we drew from the daily time frame, the overall low here. And this is not really something I'm focusing on in this video. I'm not focusing on targets. You could trade this aiming for many different targets, lots of different ways to manage the trade. But for the purposes of the video, I'm going to just set a 1.5R target, which is more than what I'm risking for the trade. So this would be a sell limit order that I would set in my broker. And personally, I use MetaTrader 5. I do this on a separate platform, just my personal preference. So I would do that now if this is a live trade. But for the purposes of the video, let's see if this gets triggered in. So that looks like it would just get triggered in on that candlestick, and definitely get triggered on that candlestick. And that's a really beautiful candlestick that's nice to see because it has come up into this optimum trade area. We've got this wick and it's closed bearish. We've got a small doji, a larger upper wick. It's rejecting those levels. What I'd like to see now is price to just drop down. Okay, so it was a little bit unsure at this point. We got a push up. It's not what you want to see when you get into a trade, but we got this immediate push back down, which is really nice. So the buyers come in and the sellers immediately bring them down. So that would be a nice place to maybe even add to a position because you've got that extra confirmation. And from there, you can see that price just drops very nicely down, little bit of a pullback, and it drops down to the target. And it looks like it does continue dropping some more, so there would have been room there for a larger target, but that is something to discuss on another video. Do let me know if you've got any questions or comments about anything we've discussed in this video. It's always great to hear from you. Meanwhile, if you have enjoyed it, if you found some value from it, do let me know by hitting that like button. Don't forget to subscribe to the channel, and I'll catch you in my next video. Thanks for watching. Bye.